Good morning, Chairman Chen, Clement. A very warm thanks for inviting me to be with you again this year, albeit virtually this time. I'm very pleased that it's been possible to still hold the Asian Insurance Forum despite COVID-19, and I hope everyone remains healthy and safe. I'd much rather be joining you in wonderful Hong Kong, but I'm very glad that I can nonetheless share this video message with you. It looks like you have a very full agenda today, which is not surprising given the very ambitious plans for the growth of the Greater Bay Area insurance market and the broader Asian insurance market. With 70 million residents, a dynamic tech environment, and its position as a growing hub for international commerce, I very much feel that the Greater Bay Area meets the necessary preconditions to establish itself as a leading international insurance center. And that's important because a dynamic insurance sector supports sustainable economic growth, promoting resilience to shocks and the effective pricing of risk in the real economy. And there is huge potential for the insurance industry to support sustainable, innovative, and resilient economic growth in this region. Key to realizing the potential of insurance is addressing the protection gap. Globally, the protection gap in traditional life and non-life insurance has always been there, but it continues to grow. And new risks like climate, cyber, and pandemics are largely without cover. To mention a staggering number, Swiss Re estimates that the total premium potential from addressing the protection gap would be more than 800 billion US dollars. So closing this gap will not only provide significant commercial benefits, but also clear social benefits. And I guess you'd be unsurprised to hear from the Secretary General of an international community of insurance supervisors that I believe that efforts to increase access to insurance and close the protection gap should be built on effective regulation and supervision. With its work to develop an enhanced risk-based supervisory framework and to facilitate digital transformation and broader risk management tools, I believe that the Insurance Authority here in Hong Kong is taking significant strides towards this goal. The COVID-19 crisis has really reinforced the importance of insurance. The pandemic has shone a spotlight on the susceptibility of societies and world economies to long-tail systemic shocks and raised awareness of these perils. The good news is that the global insurance sector has so far remained resilient. Despite these unprecedented economic and market conditions, solvency ratios have remained generally well above jurisdictional requirements, and the impact on liquidity positions of insurers has largely been limited. However, we also have to acknowledge that efforts by some central banks to stabilize markets were significant even in comparison with the actions that we've seen over the last decade. It's therefore important that we remain vigilant. So how do we maintain this resilience? Well, as the COVID-19 crisis has shown us, in this heavily interconnected world, we often face global challenges that demand global solutions. Effective cross-border supervisory cooperation is key. to the insurance supervisory community's response to global vulnerabilities, particularly, first of all, for the supervision of internationally active insurance groups, and secondly, for an effective approach to systemic risk through coordinated macroprudential supervision. So too is a global standard that provides a common language for solvency regulation. A global insurance capital standard is even more important in periods of global stress. As you will know, the IIS is currently at the beginning of a 5-year monitoring period for the Global Insurance Capital Standard, or ICS. The observations from the real-time stress test in 2020 is providing very valuable information to help further refine the ICS so that we end up with a global supervisory tool that will build mutual understanding and a common language for discussions amongst group-wide supervisors and host supervisors. Secondly, the IIS's holistic framework for the assessment and mitigation of systemic risk provides an enhanced set of supervisory policy measures for macroprudential purposes. These reforms are already bearing fruit. This year, we used the IIS's global monitoring exercise, a key part of the holistic framework, to collect data directly from insurance groups and from supervisors to monitor the impact of COVID-19 on the global insurance sector. The results up to the first half of 2020 show that so far the insurance sector has acted as a shock absorber rather than an amplifier of vulnerabilities. We're very pleased that the Insurance Authority of Hong Kong has played such an active role in contributing to the IIS's work on both insurance group supervision, including the ICS, as well as our work on macroprudential supervision. As a global financial services centre, Hong Kong is a key member of the IIS, and we look forward to supporting HKIA's efforts to help build an even more dynamic insurance market and economy in the Greater Bay Area, and walking together on the road to enhanced risk-based supervision, including ultimately the adoption of ICS. But perhaps a few words also about our future focus. Given the international nature of insurance markets, there are several emerging and accelerating trends that are common across all of our members. I'll like to touch on two important challenges, which I'm sure will be part of your discussions today. Firstly, developments in technological innovation or fintech, and secondly, climate risk. Firstly, on technological innovation. Well, Hong Kong is one of the world's leading fintech and insurtech hubs, so I don't need to tell you the extent to which technological innovations are significantly changing the insurance market. New products, new business models, as well as a new set of market entrants are having an increasing impact. COVID-19 has been a catalyst for these changes, even further reducing the barriers to the adoption of innovation. In many cases, supervisors have contributed to this impetus. For instance, by bringing into place temporary changes to regulations, which allow the use of technology to enable continuous service to policyholders without compromising consumer protection. So to give an example, which I believe was in place in Hong Kong, measures to facilitate remote interaction between customers and intermediaries for concluding insurance contracts. Some have suggested that these temporary technology-driven changes that we've seen here in Hong Kong and elsewhere should be made permanent, something we will certainly be looking at the IIS level. While fintech has the potential to bring many benefits, its effects will be disruptive, upturning many ways of doing business and presenting challenges to good consumer outcomes, for instance, where discriminatory practices emerge. It's therefore essential that market participants and supervisors ensure these risks are effectively understood and managed. We must do this by creating space for responsible innovation, balancing the social benefit of these technological solutions with the effective supervision of the risks that they might pose. Understanding how best to balance these objectives and how to adapt our regulatory and supervisory tools is going to be a key area of focus for the IIS over the coming years. Lastly, on climate risk. This is the most significant challenge that the insurance industry will face in the coming decades. For insurers, the issues related to climate change present both risks and opportunities that will be relevant for both sides of their balance sheets. Not only are insurers significant institutional investors exposed to both physical and transition risks, but more importantly, insurers are in the business of understanding risk, which will be key to ensuring resilience of economic activities in the face of climate change. Effective risk management, which is at the core of insurance business, will be key. The job of insurers will be to shift to a much more proactive approach of generating risk intelligence and helping not only their customers, but also governments and policymakers to mitigate these risks. Consider the risks in this region. We know that typhoons regularly affect the Greater Bay Area. With climate change, the frequency and intensity of these storms will increase. Swiss Re estimates that between 1990 and 2017, typhoons caused annual economic losses of $1.4 billion in the Greater Bay Area, of which only 5% of these losses were covered by insurance. As economic growth across the region increases, so too will the value of insurable assets. At the same time, the physical effects of climate change will grow, and as these dynamics unfold, it will be essential to close the insurance protection gap to improve economic resilience. The IIS will continue to support its members in this work. The IIS is currently consulting on an important application paper that provides a comprehensive guide to supervisors on how to address the challenges and opportunities arising from climate change within the framework of our insurance core principles, and discussing what further work could be done in this area. So to conclude, during the course of today's discussions, I hope you have the opportunity to reflect on the common issues we all face and the benefits of continued international collaboration. Maintaining a resilient global insurance sector can only be achieved through this international cooperation. It's my wish to continue to build on the very strong relationship between the IIS and the Hong Kong Insurance Authority and other members in this region, so that we can continue to learn from each other and work together on the growth of a strong and stable insurance sector for the benefit of all. I wish everyone much health and success for the future, and I look forward to our ongoing strong collaboration and hopefully joining you in Hong Kong at a future occasion. Thank you very much.